If you hate paying taxes but love saving money, this is for you. Join Money Smart Basics as we take on the challenge of finding legal ways to pay zero taxes in the USA today. From deductions to credits, you won't believe what's possible. Stay tuned and save big. Remember to like and subscribe for more Money Smart Basics videos. Stay until the end to receive a bonus tip. If you have any suggestions for financial literacy topics for our next video, please leave a comment. Paying zero taxes, is it really possible? It's a question that has crossed the minds of many, especially when tax season rolls around and the stress of filing returns sets in. We've all heard the rumors, whispered in hushed tones, stories of people who somehow manage to pay nothing in federal income taxes. Some people pay zero taxes, legally. Sounds crazy, right? But it's true. There are individuals who, through a combination of knowledge and strategy, manage to reduce their tax liability to zero. Well, it's not as crazy as you might think. In fact, it's more common than you might realize. The tax code is complex, but within its pages are numerous provisions that can be used to minimize what you owe. Every year, millions of Americans legally pay zero federal income tax. This isn't a loophole or a trick. It's about understanding and utilizing the tax laws to your advantage. How do they do it? The answer lies in a combination of deductions, credits, and strategic financial planning. It's about knowing what you can claim and how to structure your finances. It's not magic, it's just understanding the system. The tax code offers various ways to reduce taxable income, from retirement contributions to education expenses and beyond. This isn't about some shady offshore account scheme, it's about using the legal tools available to everyone. We're talking about legal strategies anyone can use. With the right knowledge and planning, you can significantly reduce your tax burden. This isn't about dodging your civic duty. Paying taxes is an important part of contributing to society, but that doesn't mean you should pay more than you owe. It's about keeping more of your hard-earned money. By understanding the tax code and making informed financial decisions, you can ensure that you're not overpaying. Ready to learn how? Let's dive in and explore the strategies that can help you keep more of what you earn. Let's start with the basics. The standard deduction. It's a fundamental part of the tax code that can significantly reduce your taxable income. Think of it like a free pass on a chunk of your income. This means you get to keep more of your hard-earned money without having to pay taxes on it. In 2024, single filers can earn up to $13,850 tax-free. This amount is automatically deducted from your income, lowering your taxable income. Married couples? Double that to $25,900. This means if you're married and filing jointly, you can shield a significant portion of your income from taxes. That's right, if you're single and make less than $13,850, you might owe Uncle Sam nothing. This can be a huge relief, especially for those with lower incomes. This is especially helpful for low-income earners, students, and retirees. For students juggling school and part-time jobs, or retirees living on a fixed income, the standard deduction can make a big difference. The standard deduction is a powerful tool. It simplifies the tax filing process and ensures that everyone gets a fair shake when it comes to paying taxes. Make sure you're taking advantage of it. By understanding and utilizing the standard deduction, you can maximize your tax savings and keep more money in your pocket. The standard deduction has evolved over the years, increasing periodically to keep up with inflation and changes in the cost of living. It's designed to provide a baseline level of tax relief for all taxpayers. Many tax software programs and professional tax preparers automatically apply the standard deduction, making it easier for you to file your taxes accurately and efficiently. Whether you're filing as an individual, a married couple, or head of household, the standard deduction can significantly reduce your tax burden. It's a key component of tax planning and financial management. Remember, the standard deduction is just one of many tools available to help you manage your taxes. By staying informed and proactive, you can make the most of your financial situation. So, as you prepare your taxes this year, don't overlook the power of the standard deduction. It can lead to substantial savings and a happier, healthier financial future. Take control of your taxes, understand the benefits available to you, and make the standard deduction work in your favor. Your wallet will thank you. Got kids? Uncle Sam might just cut you a break. The child tax credit can put up to $2,000 back in your pocket per child. And don't forget about dependent care expenses. Daycare, after-school programs, even summer camp can qualify for tax benefits. Having a family is expensive, we get it. Luckily, there are tax breaks designed specifically to ease that burden. Don't leave money on the table. Explore every credit and deduction you qualify for. Here's where things get really interesting: refundable tax credits. These credits can actually reduce your tax liability below zero, meaning you get money back even if you didn't pay anything in. The Earned Income Tax Credit, or EITC, is a prime example. This credit is designed for low to moderate income working individuals and families. It can be worth thousands of dollars. Remember, these credits exist to help you. Don't be afraid to claim what you're owed. Section 5. The magic of itemizing deductions you can use. In this section, we will explore the various deductions that can help you save money on your taxes. Sometimes the standard deduction just doesn't cut it. You might find that your specific expenses exceed the standard amount, and that's when itemizing becomes a valuable tool. That's where itemizing comes in. By itemizing, you can list out individual expenses that are deductible, which can add up to a significant amount. Itemizing allows you to deduct specific expenses, potentially lowering your taxable income even further. Medical expenses, state and local taxes, charitable donations, these are just a few examples of what you can deduct. Let's break these down a bit more. Medical expenses can include everything from doctor visits to prescription medications. If you have significant medical costs, these can really add up. State and local taxes are another big one. This can include property taxes, state income taxes, and even sales taxes in some cases. Charitable donations are also a great way to reduce your taxable income. Donations to qualified organizations can be deducted, and this includes not just cash donations, but also the value of donated goods. It takes a bit more work, but the payoff can be significant. By carefully tracking and documenting your expenses, you can potentially save a lot of money. It's important to keep thorough records and receipts for all your deductions. This will make the process smoother and ensure you have everything you need if you're ever audited. Talk to a tax professional to see if itemizing is right for you. They can help you navigate the complexities of the tax code and ensure you're taking advantage of all the deductions available to you. Remember, every little bit helps when it comes to reducing your taxable income. So take the time to explore your options and see how itemizing can benefit you. With the right approach, you can make the most of your deductions and keep more of your hard-earned money. Happy itemizing. Section 6. Zero tax retirement strategies for seniors. Retirement should be a time to relax, not stress about taxes. Good news, there are ways to minimize your tax burden in your golden years. Strategic withdrawals from retirement accounts like 401ks and IRAs can keep your taxable income low. And don't forget about Social Security benefits. Depending on your income, a portion of your benefits may be tax-free. Retirement planning is crucial. Start early, plan wisely, and enjoy your tax-efficient retirement. Section 7. When the rich pay nothing, legal loopholes. Now let's talk about those whispers you've heard. The super wealthy paying zero taxes. While it's true that some utilize perfectly legal loopholes, it's not as simple as snapping their fingers. These strategies often involve complex investments, charitable trusts, and offshore accounts. It's a full-time job, requiring teams of lawyers and accountants. While these loopholes exist, they're usually out of reach for the average taxpayer. Section 8. The ethics of tax avoidance. Minimizing your tax liability is one thing, but what about the ethics of paying zero taxes? It's a complex issue with no easy answers. Some argue that it's our civic duty to contribute. Others believe it's our right to minimize our tax burden within the law. Ultimately, the decision is yours. Just remember, taxes fund essential services like education, healthcare, and infrastructure. It's a balancing act between personal financial well-being and the greater good. Section 9. Take control of your taxes. Navigating the tax code can feel overwhelming, but it doesn't have to be. Arm yourself with knowledge, explore your options, and don't be afraid to seek professional advice. Remember, you have the power to legally minimize your tax liability. Whether you're aiming for zero taxes or simply want to keep more of your hard-earned money, taking control of your taxes is empowering. So, what are you waiting for? Start planning your tax strategy today. Congratulations, you made it to the end of the video. With that, you are ahead of 90% of most people in America. Here is the bonus tip that we promised. Tired of seeing your hard-earned money go to taxes? Listen up, use tax credits to your advantage. Just like Sarah, who cut her tax bill to zero by maximizing credits for education and energy-saving improvements. Start exploring today and keep more of your money. The information in this video is for educational and entertainment purposes only, and is not intended as financial advice. We are not financial advisors, and the content should not be construed as professional financial advice. Always seek the advice of a qualified financial advisor or other professional regarding your specific financial situation. The use of any information provided in this video is solely at your own risk. Please remember to like, subscribe and comment for more Money Smart Basics videos.